Ladies and gentlemen, good day and welcome to the Bandhan Bank Q3 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vikash Mundra. Thank you, and over to you, sir.
Thank you, Zico. Good evening, everyone, and a warm welcome to all the participants. It's our pleasure to welcome you all to discuss Bandhan Bank's business and financial performance for the quarter ending December 2023. We will take this opportunity to update you on the recent developments in the industry as well as on Bandhan Bank during the quarter. To discuss all this in detail, we have with us our Founder and Managing Director and CEO, Mr. Chandrasekhar Ghosh, Executive Director, Mr. Ratan Kumar Kes, Interim CFO, Mr. Abhijit Ghosh, myself, Vikash Mundra, Head of Investor Relations, along with other senior management team of the bank. We will be happy to provide you with any clarity if required from the current quarter numbers and the way forward. Now, I would like to request our Founder, MD and CEO, Mr. Chandrasekhar Ghosh, to brief you all about our bank's operational and financial performance, along with the developments for the quarter ending December 2023. Over to you, sir.
Thank you, Vikash. Namaskar and warm welcome to all of you. I am presenting to you, this is the third quarter financial year 24 result, which bank has been performed. The bank have been performed very good in this quarter, and this quarter has also been one of the important quarter for the bank, as in this quarter, because the bank went under new CBS platform from the old CBS platform, and for that reason we have a little bit delay to publish the result instead of third week of the next month of the quarter to today. So all our systems and process are now fully stable and working under the new CBS, and it has been helped to bank to further grow in a different way. Coming to the advances, let me now move on to business number. Despite the various global uncertainties, India's macro parameters remain strong. RBI expects the real GDP growth 7%, CPI inflation 4.5% during financial year 25. The favorable macro backdrop should continue to help the momentum in the Indian BFSI sector in the coming quarter. During the quarter 3 financial year 24, our bank, Bandhan Bank's overall advances grown 18.6% year-on-year and 7.7% quarter-on-quarter. The growth in the loan book reflects an uptick in demand across the asset verticals, which now stands as a total advance book 1,16,000 crores. Sorry. EEB vertical added 6 lakhs new borrowers during quarter 3 financial year 24, as the EEB portfolio increased 7.5% quarter-on-quarter and the 10% year-on-year. Growth in the case of retail assets and commercial banking continued to be impressive. The retail loan book, other than the housing loans, grew 70% year-on-year and 15% quarter-on-quarter. The commercial banking vertical also grown very good, which is 60% year-on-year and 9% quarter-on-quarter. The housing finance book has registered a growth of more than 6%. We know that during the quarter, we sold the housing loan NPS, which is 720 crores to ARC. Adjusting to that, the growth of this book have been above 9%. In line with our medium-term strategic objectives, the share of secured assets as part of our total loan book continues to increase. It reached around 44.5% in the Q3 financial year 24, up from 44% in the last quarter. We expect to have nearly 50% of our portfolio will be secured asset by financial year 26. Coming to this, the liabilities. On the liability side, total deposit has been now reached 1,17,000 crores as on December 23 and grown 15% year on year and faster than the industry growth. As we focus on granular retail deposits, our total retail deposit and retail term deposit grown by 18% and the 22% year on year respectively. The retail to total deposit ratio, which was at around 69% in last December 2022, moved above 71% by December 2023. CASA deposit, which stands at the rupees 42,413 crores as of the end of Q3 financial year 24, have shown an impressive growth of 14% year on year. CASA ratio stands at a healthy 36.1% despite the tight liquidity in the market. Microfinance customers continue to contribute just about 4% of our total deposit. Customers continue to respond to their trust in the bank. The bank has added above 9 lakh customers in this quarter, and number of liability customers increased by 14% year on year, which have been helped us to future retail deposit growth will be like to grow, which are we expected. Collection. Let us know about the trend in collection and asset quality. The first, the collection. The bank's overall collection efficiency remains healthy. The bank's overall collection efficiency, excluding NPA, stood as stable at 99% for the December quarter of 2023. Asset quality. On the asset quality front, the bank has seen a stable quarter. In fact, we have seen green shoots in several parameters, like gross NPA ratio improved at 7% from the last quarter, which was in a 7.3%, 30 basis point in the decrease. And if we compare to this last year, the same quarter, it was in a 7.2% and 20 basis point reduced. Net NPA stood at 2.2% in Q3 24 versus in the 2.3% in the last quarter. Gross slippage during Q3 financial year 24 was in 1,390 crores, which over a 600 crores, which is the 45% was seen during the month of October, reflecting some of the disruption due to CBS system migration and immediately followed by the festival season. However, monthly average net during November and December was much contained at around INR 380 crore per month, not only sharply lower than in October, but also better than run rate during the previous several quarters, even the couple of years. We expect the run rate to further fall down in the current quarter. There has been improved across the buckets in the EEB loan. If we see that our SMA 0 book in the previous quarter was around 963 crores, which is now has come 805 crores, which is a 1.5%. If I come to the similar in a SMA 1, which book in the September quarter was around 609 crores and reduced and come 567 crores, which is a 0.9%. Likewise, our SMA2, which is the book in the September quarter, was around 688 crores, which has now reduced to the 526 crore, which is a 1%. If I see this, that these three SMA 0, 1, 2 together, it has come to this 3.4%, and last quarter it was in a 4.8%, and last quarter it was in a 5.5%. So gradually we've seen that the quarter-on-quarter basis, the slippage has come down, which have been going to impact positively our NPA or slippage has coming down. The financial year 24 book, consisting of all loans disbursed from April 2023 to the December 2023, is turning out to be a strong one. The gross NPA of those book ratio of financial year 24 book stands at 0.11%. Means whatever loan we are disbursed in a EEB in this financial year, their total NPA has come 35 crores, which is the percentage wise is a 0.11%, which was in a last year is in 0.5%. Coming to this, this is the point we have been seeing that the trend of the slippage and recovery and the NPA percentage of the new book, which have been shows that the quality of the portfolio are increasing and the reduce of this the risk-based portfolio, which is the future will be like to better way we see that the growth of the business with a quality portfolio. Profitability. The bank has registered a net profit of 733 crores during the quarter financial year 24 against a net profit of 291 crores a year ago. This was a year-on-year growth of 152% in the profit. Our net interest income in quarter 3 financial year 24 reached 2,525 crore compared to the last year the same quarter 2,080 crores, which registered the growth of year-on-year 21%. Our net interest margin improved the 7.2% compared to the last quarter 7.2%. If I compare to the last year the same quarter from 6.5% increase to this the 7.2%. Total credit cost has been stable at 2.5% in quarter 3 financial year 24. The bank delivered on ROA of 1.9% and ROE of 14% in quarter 3 financial year 24. Coming to this, the branch and digital expansion. The bank continue with the emphasis on its branch network. This quarter, we have added 26 branches. Today, the bank has a branch presence in 35 out of 36 states and union territories of the country. I also want to highlight how our performance in digital banking has improved further. 95% of our total general banking transactions are happening digitally. Growth in digital registration is up 34% year-on-year. Our digital transaction volume increased 36% year-on-year. Our UPI transaction increased 39% year-on-year. The bank has been empaneled by states like Goa, Gujarat, Chhattisgarh and Maharashtra for state government business. And it will be helped to the bank to mobilize the more deposit. And the state of Assam and Meghalaya have authorized the bank to integrate the electronic government receipt accounting system which is called as a eGRAS, a single online collection medium for all tax as well as non-tax revenue, which will be also helped to the bank to increase their revenue. New senior leadership talent. We have recently received the approval from RBI for the appointment of the second executive director, Mr. Rajinder Babbar. Our new CFO will also soon be onboarded. Both of these as a senior management member will join us soon. We also have Sri Santosh Nair, who has joined us from HDFC Group as the head of consumer lending and mortgages, sitting right with me. And I find out on that these all people are leaders, very senior and experienced, join with us, with our old executive director Ratan Kesh and other of my colleagues, will be strengthen the bank's senior management team to reach the goal of the bank across the country. Conclusion, from my side, we expect the growth momentum across major business verticals to continue in the fourth quarter of the financial year, which we saw in the trend in the last 3 quarters. And also it will be helped us to show the trend of that quality of the portfolio. Of late, we have successfully completed the migration into the new CBS and have initiated several steps to boost cross-sell and branch-led sales to grow the retail assets and liabilities portfolio, and also to increase the productivity per employees supported by our digital and analytical initiatives. Overall, we are well on our way to achieving long-term strategic goals of portfolio and geographical diversification. I wish you and your family all the very best. Thank you, and thank you to all of you to continue your trust and the support to our bank. Now, I am requested to my Executive Director, Sri Ratan Kesh. He will be like to give some more point which you have like to know about it. Thank you. Please, Ratan.
Thank you, sir. I once again thank all of you for joining the call. I believe some of you may have questions on our CGFMU portfolio and ongoing audit. I would like to clarify a few points relating to that. First of all, let me put some statistics here. CGFMU was taken entirely for FY 2021, which is the COVID period. Neither before or after we have taken any CGFMU cover. The total portfolio under which we have taken a cover was 20,800 crore under CGFMU, and we disbursed nearly 1950 crore under ECLGS. Out of the total portfolio of 22,750 crore, combining CGFMU and ECLGS, nearly 85% of the total portfolio, which is roughly 19,000 crores, have been repaid by the customers over a period of time. The remaining amount, which is around 3,600 crore as of December 2023, is sitting as stress book in my current portfolio, and we are carrying a provision of more than 89% on that portfolio. The maximum eligible amount, if you know, as part of the CGFMU scheme, that a bank or an institution can claim insurance cover is 15% of the total insured amount. For us, on that 20,800 crore, it turns out to be 3,100 crore. Our total claim put together of first tranche and second tranche is roughly around 2,200 crore, which is significantly below the prescribed, or let's say maximum eligible, that the scheme would have suggested. So far, we have claimed and received an amount of 917 crore in December 2022. Subsequently, in second quarter of FY24, we made an additional claim of 1,296 crore. So the total claim amount, as I said, is much lower than the maximum eligible limit in the scheme. Now we continue our recovery process from these accounts. For example, in the first tranche of 917 crore that we received last year from NCGTC, we have already recovered 214 crore, which is more than 20% of the claimed amount. As part of the scheme, we have set that aside for refunding to NCGTC. NCGTC also had done an initial sample audit subsequent to putting our second claim of 1296 crore, and the agency made certain observations in the audit, and we believed that some of these observations were inadequate and rather inappropriate, and therefore we clarified our stand on those. However, NCGTC, before deciding on the final matter, they decided to conduct a detailed audit to validate our submission. The bank is fully cooperating and submitting all the documents requested by the audit agency. The audit is currently underway. We as a management expect the results of the audit to be completed in the next few months, and we are fully confident that we will recover the money from CGFMO.
Thank you.
Thank you, Raman.
Thank you.
Rico, you can start the Q&A, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mahrukh Adajania from Nuvama. Please go ahead.
Hello, sir. Hi, good evening. My first question is on the CGFMU audit. So the amount involved is very small, as you just explained, which was helpful. But is this a forensic audit like some media articles say, or just a normal detailed financial audit?
See, look, our understanding as management is that forensics can be conducted by certain entities. We don't want to beyond a point claim this and create a problem for ourselves. But the point is that subsequent to a sample audit, we validated and submitted our submission, and therefore a detailed audit is what is being conducted. But as far as NCGTC, they claim that it's a forensic audit which is adequately published by them in their website. So we will say it is a forensic audit. Having said that, we have our views as to who is allowed to conduct a forensic audit.
Okay, got it, sir. Yes, that was my doubt as well. And then, sir, just in terms of the SMA pool, so obviously the EEB SMA pool has declined, but where do we see it settling, right? Because the slippage is still, first of all, what would be the EEB slippage?
If we see that the slippage of EEB in this quarter is 993 crores out of 1390 crores.
Okay.
And I also mentioned in that point the 45% of this amount of the slippage of EEB has slipped in the month of October, where we are transformed and given some holiday or more in the time of festival. For that reason, slippage you are not like to stop; it is automatically are going on that. So this is the point. But if you go to the next month onwards, and this is then so much in the month-on-month basis so low, we have not seen that last 2-3 years that much of that. So it has given the comfort to us. This has been calmed down. And second point, I also mentioned whatever the portfolio we are shown that the EEB portfolio, as in the year of 2023-24, we disbursed the loan. 85% of the total EEB book is lies which are disbursed in a 23-24, and there this portfolio quality so good, it has been showing that NPA only 0.11%.
Got it, sir. So just one clarification that you expect the low slippage that you saw in November, December to continue in the next few months also?
It will be again come down on that.
Okay, sir. Thank you. Thanks a lot.
Thank you. A reminder to all participants, ladies and gentlemen, you may press star and 1 to ask a question. To ask a question, please press star and 1. The next question is from the line of Yuvraj Chaudhary from Anand Rathi. Please go ahead.
Good evening, sir. Thanks for the opportunity.
Sorry to interrupt, sir. Mr. Chaudhary, may I request you to use your handset, sir? Your audio is muffled, sir.
Hello, now is it clear?
Yes, sir. Thank you very much, sir. Please go ahead.
Sir, good evening, sir. Thanks for the opportunity. Sir, now with the CBS migration done, so could we expect some OpEx levels to come down? So any target do we have on OpEx to asset ratio?
No, if you see that the OpEx to asset ratio, we are predicted on that the 3.5% to 3.7%. So if we see that the first quarter it was a 3.5, second quarter has come 3.7, again the third quarter has come to the 3.6. So we say that it will be like to continue in this line because of that the lot of IT, if you see that the intervention happened in the bank for the future growth, it is a two type of cost has come. One cost has come operational, so it will continue, we cannot reduce. But other cost is a capital cost, which has been like to make as in every year, book some of the cost on that. Depreciation, whatever we say that. So that both will be like to impact a little bit, but not, it will be like to increase the more than 3.7% of that.
Sure, sir. Thanks. Sir, on margin, so NIM was stable at 7.2% on a sequential basis despite strong growth due to cost pressures. So could we see NIM at the same level in the near term, or could we see some improvement in NIM?
If you see that the prediction of that, the NIM, there is a two part. One part is a cost of fund. So whatever the cost of fund has been increased, I feel that it is in very good way has come on that. And as per the yesterday, the regulators, the prediction, so it cannot be like to further like to grow. So that it will be, if it is in fixed on that, the future it will be again come down. And second, my point on that, whatever that the cost of the bank is means on that, when the risk portfolio has come down, slippage has come down, automatically it will be also help to the bank to better way to maintain on that. But I am not very much say that it will be very long term can be like to say, but I say that this quarter 7 to 7.5 we can be like to do. And the March we have that strategic meeting, we can analyze further on that, and again we will be like to communicate to all of you on that what we can be like to pass on. But we will say that the same line will be like to continue.
Sure, sir. And sir, last question would be, sir, some color on a portfolio in Punjab would be helpful. Like what would be our AUM there, collection efficiency, if you can throw some color on that.
So Punjab point of view, we have not very much more in the portfolio in there. And so
we'll give the number.
We will give the number.
Very small portfolio.
Very small portfolio. I can be say that in the very 714 crores, like on that.
Entire book.
Entire book?
Out of a total book of 58,000 odd crores, 714 is the Punjab portfolio.
Okay, sir. That was helpful.
Okay. Thank you.
Thank you. A reminder to all participants, ladies and gentlemen, you may press star and one to ask a question. The next question is from the line of Mohit Jain from Tara Capital Partners. Please go ahead.
Hello.
Hello.
Yeah, good evening, sir.
Yes, good evening, Mohit.
Sir, I just wanted to understand on this slippage part because of the system migration. Sir, I believe we have this weekly collection model. So when this transition happened, how did it exactly affect the slippage? Was it like we did not have the group meeting for let's say a particular period of time? And just the related question is, sir, overall the increase in GNPA is more in rest of India portfolio. I think in West Bengal and Assam it has come down. So is it also that the transition affected the collections in the other state and not these two states where our focus was higher?
So there are 2 points, Mohit. One is that on 3rd October we migrated to the new system. Given that we are migrating on that day we declared as a holiday. Which means we wanted to ensure that the people are able to understand the system, which means that day was a collection holiday. But for our portfolio, it will keep moving the DPD. So for the pool, it will keep moving. That's one. Second, first few days, people got used to the new tab, new way of looking at the demand, and then go and collect it. So there are certain challenges in terms of understanding it. As much we tried to train everyone, but slowly they could quickly understand. Therefore, you see significant better November and even better in December. So that took some bit of a time. Third, of course, October you had the festive, and you see there are a whole bunch of holidays. I think 5 to 7 days holiday. Holiday is for us and customers, but DPD doesn't have holidays, so that keeps moving. Those are the 3 broad factors.
And so the related part as to why the rest of the India had a higher GNPA and why we performed better in West Bengal and Assam. The same reason, sir?
Yeah. No, if you see that the industry perspective, if you see the Maharashtra is an issue, and also partly also UP. So that is the 2. And third, you specifically for us is a Manipur. You know that the issue. No. So that is the MP also partly. What happened on that in the microcredit point of view? If you look under, this is the group-based credit. And when the group-based credit is a need to group bonding in the meeting. After the pandemic, some states very quick, they are recovered and coming to the group meeting attendance and also bonding very good. Some states, some pocket, they are taking more time. And those areas little bit this slippage will happen like to see. So it will be improving by the month-on-month basis. We see that. And we are also taken very, very corrective measure, and we are a very separate team working on that. And very quick, we'll be like to come back on that.
Okay, sir. And so just one question, final. So do we foresee any impact from the upcoming elections that will be there on the disbursement or the collection, sir?
No, we have not seen on that.
Okay. Thank you, sir.
Thank you.
Thank you. A reminder to all participants, ladies and gentlemen, you may press star and one to ask a question. The next question is from the line of Ritika Dua from Bandhan AMC. Please go ahead.
Yeah, so thank you for the opportunity. So firstly, you shared that going forward, the share of secured to unsecured would be 50-50. If you don't mind, just what is the number today?
Today number is in secured is a 44.5. So, and the 55.5 is an unsecured.
Right. So, sir, just maybe you even have a new person joining on the retail and the consumer side. Either would be good to hear from you or him, sir. How are we looking to get to this journey of increasing, and which would be the focus area?
Okay. I request on that our Santosh Nair, who is the head of that retail and mortgage business, he will be like to address. Please.
Hi. Good evening to all of you. See, you can hear me. I hope you can hear me.
Yes, sir. Thank you.
Okay. See, the whole idea is like when I have joined here, there's a clear chance like we want to stay focused on the affordable segment because we clearly see a demand in the affordable segment. The only way that we can do is, probably get into more geographies, probably look at our internal sourcing and internal branches where we think we have a cross-sell opportunity which we can explore, and also get into the digital way of lending across all the retail asset products and mortgages. So that way we could surely see a progress towards what MD mentioned and try to get it at 50%. It's early days for me now, but we are reviewing it. We have a strategy meet in the next week, 10 days, post which we will take a collective decision on how we have to move forward.
So that's helpful. And sir, just one more question. If I could just request you to reiterate the long-term guidance which you have shared on the various, the growth and the ROA and ROE. Thank you. That's it from my side.
And we are guided on that ROA and ROE. ROE, we say that the 14 to 18% of ROE, and ROA, we are like to predict it on that the 2.5 to 2.8.
So, Ritika, we are having our strategy meet somewhere by end of February, right? So, where we will discuss our for next 3 years plan. And once we do that, after that we will share with the market participants. So please allow us, 1 quarter more to give you, about our long-term plan.
Sure, so that's helpful. Thank you.
Thank you.
Thank you. Our next question is from the line of Saurabh Kumar from JP Morgan. Please go ahead.
Sir, just 2 questions. One is the SMA, if you look at the total 0 plus overdue book, that's gone up by, 470 crores quarter on quarter. I just want to know, is this your normal run rate? Because this book went up also by like 230 crores in second quarter and about 1100 in first quarter. So just in terms of the 0 plus, how do you think this forward book, how much does it flow through? Or should we think about this 475 crores as a normal run rate from here on?
Saurabh, I believe, considering the current situation and the stringent underwriting norms which we have taken place, at least 300 to 500 crores of addition, from zero to the DPD is what we are expecting even for one or 2 quarters. And then, we'll work out how the situation improves and then we'll let you know further. But as of now, yeah, for the next 1 or 2 quarters, yes, that's the run rate which we believe would continue.
Okay, helpful. And the second is just in terms of the savings account. Can you just quantify how much of how much of it would have been wholesale savings versus retail, or is all retail savings which has come off quarter on quarter?
Out of the savings, only 5,000 is wholesale.
Only 5,000 is a wholesale saving, and balance are the retail.
Okay, so the decline which we are seeing quarter on quarter is a wholesale decline.
Yes.
Okay, got it. Thank you.
Thank you.
Thank you. Our next question is from the line of Manish Shukla from Axis Capital. Please go ahead.
Yeah, good evening and thank you for the opportunity. On housing finance, slide number 13, just curious, what is driving the IBPC purchases? Because if I look at the quarter-on-quarter increase in IBPC purchases is almost same as the fresh disbursement in housing loans. So just curious, what is driving the IBPC purchases here?
No, if you see that the IBPC purchase, this is a good opportunities also to earn some revenue from the portfolio. And this is of course as a secured, and that is the two major objective on that. When the opportunities has come, we are taking that opportunities.
What will be the yield outcomes on the two IBPC purchases versus what you discussed on?
I the 0.75 is a net we can earn.
Okay. Moving on to liabilities, can you share the average cost of your CASA deposits?
Average?
It will be slightly over 5. Give us some seconds.
5.16.
Okay. So if you look at our liabilities mix, right, the bulk of the liability growth seems to be coming from non-retail TD, which would be more expensive than retail TD. So in that context, I'm just trying to understand the balance sheet growth strategy. So between growth and margin, how do you look at it? And are you comfortable growing your balance sheets and funding it via non-retail TD and keeping margins where it is, or would you look at slowing growth and improving on margins?
So I'll take that. So our the deposit strategy has always been focused on retail term deposits. While there are opportunities on the wholesale piece also, whenever we have found opportunities, we've taken them, and we have been very circumspect in taking clients on the wholesale front. However, the retail focus continues, and if you see the growth that we've seen on a YOY basis on a retail term deposit has been around 25%. That's reasonable growth, and that focus continues.
I was talking more from a sequential growth perspective, December over September, because that is when we've seen loan growth for you after 6 months.
Yeah, so we grew about 6% quarter on quarter on
and
the
that was
retail term
primarily by non-retail TD.
No, on the retail TD bit we grew by 6%, and of course the overall TD growth that you see, the rest of it was wholesale.
Okay, all right. Thank you.
Thank you.
Thank you. The next question is from the line of Prabal from Ambit. Please go ahead.
Thank you. Am I audible?
May I request you to use your handset, please? The audio is not clear.
Yes. Is it better?
Yes.
So my first question is on the margins. So credit to deposit ratio improved 300 basis points sequentially, and still margins were stable. So had it not been for the liquidity, is it fair to assume that margins would have declined?
If you see that of course it is in another side of this, when it will like to go to the decrease the CD ratio, cost will increase. But we see that the two other things. First thing is the quality of the portfolio. It will be like to help reduce the cost. And second point on that, whatever the rate is today, and that rate also in the future will be not long run. That will be also cost of fund will come down, and that will be like to balance gradually. Okay.
So can we increase CD ratio further? It is at 93%. So can this be further increased from here on?
No, if you see that the CD ratio last 5 years, we are reduced at 27%. It was in 5 years before, it was 127%. Now it has come less than 100%, which is 98%. So per year we have been reduced in the 5% and more or less around on that. So we are very strategic plan on that, how it can be like to make it in a good way and we to maintain the other all issues.
Okay. My next question will be on this mix of secured versus unsecured. So you have been guiding that we are moving more towards the secured side. So with that, the implication on the yield on advance. should be on the downward side, isn't that? So structurally, our yield on advances will only come down as we raise the share of secured in our mix. Will that be right assumption?
So assumption is right. As we said that we will maintain. So as of now, our yield and cost of deposits are moving almost in tandem, and therefore you see that we are actually maintaining 7.2. We said that we will maintain 7.5, but we have our strategy meeting. We will go back and go to the drawing board and really look at all parameters, balancing all the metrics that you want to target and come back with a detailed plan. Whether you would like to compromise on some part of the NIM, etc., we will come back. But the truth is that as of now, even our retail book, 66% is secured. And those are generally high yield products. So we are focusing on some of those. Like Santosh mentioned, my colleague, that we are focusing on affordable. Yield is significantly higher than, let's say, prime segment. So our focus will continue to be not compromise NIM beyond a point.
Okay. But anyway, these secured retail will be lower than the MFI yields.
That's true.
Okay. And sir, the one data keeping question, what will be the differential between non-retail term deposit and retail term deposit?
100 basis points.
Okay. So second question will be on these branches. So just want to understand what are the nature of these branches, because branch count on a YOY basis has increased by 30%, but other expenses are virtually flat. So our OPEX per branch has come down significantly. So what are these branches where we are having this amount of savings?
So the branches are actually the standard general banking branches where we garner starting with deposits and then do cross-sell to the internal customers. So these are pretty much standard branches. And you see our some part of the cost on even people we are deploying so that we can set up our new branches, and it is generally front-loaded to add more people. Also in the retail portfolio and the housing portfolio, we are adding more people.
And this is an investment.
The shape of branches haven't changed.
Sorry?
The size and the shape of branches haven't changed.
Not really. Not really.
But then why is
what happens is whenever we are
lower
going to a new market, when you go to the new market, the first branch is generally a standard branch. When you look at the second and third branch, we may wish to compromise on the size and scale of those branches. But generally the first few branches, we are keeping it as a standard.
Okay. Thank you. All the best.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to one or two per participant. Should you have a follow-up question, we would request you to rejoin the queue. Thank you. Our next question is from the line of Jai Mundra from ICICI Securities. Please go ahead.
Yeah, hi, good evening, sir, and thanks for the opportunity. Sir, how much is the LCR for the quarter ended? Liquidity coverage ratio for the bank?
142%.
Sure. And sir, in that context, now I think someone had asked earlier also, but if you see this quarter, fourth quarter is supposed to be seasonally good in terms of AUM growth. This quarter, the growth has also revived. Now, ideally, the growth should be even higher next quarter, going by seasonality. Could that be constrained by growth in the retail term deposits? Because this quarter, retail to total deposits on a quarter-to-quarter basis, that number has come down from 74 to 71%. The deposit growth is mainly funded by non-retail term deposit. Considering what we have been hearing in the media and about RBI stance and in general tight liquidity, do you think this can impact the fourth quarter? Otherwise, super strong growth seasonally that we see in a usual fourth quarter.
Please.
Yeah, Jay. So the fourth quarter also, the momentum that we have managed to build over the last nine odd months on retail term deposits is expected to continue. However, having said that, opportunities that I mentioned earlier on the wholesale front will also be leveraged. And as mentioned earlier, the bank will pick up deposits, be it retail or wholesale, it will continue to leverage opportunities that are available.
Okay, understood. So there is, as of now, there is no, you are more or less indifferent as far as growth happens. Either it comes through retail deposit or wholesale deposit. As of now, we are not overly worried that, that can constrain the near-term growth.
Yes.
Sure. And last data keeping question, sir. If you have the recovery number in EEB for this quarter, I think last quarter it was 130 crores. And the total provisions, I think including standard, non-standard and everything for, I don't know, for the EEB or for the entire bank, any.
Total provision of the bank, 600 crores, is aligned with the first quarter, second quarter, third quarter, all quarter around 600 crores is a provision. But if you say that the recovery from EEB, 178 crores, which was in the last quarter, 139 crores.
Right. Understood. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Samir Bise from JM Financial. Please go ahead.
Yeah, hi. Thanks for the opportunity. Is it fair to assume that in terms of ARC sales, we are largely done in the near term, or do you think there could be some more for 4Q?
We have not yet planned on that. If we have the plan, then we'll be like to inform.
Okay. And secondly, in terms of margins, while you said that we are incrementally into secured retail, which are slightly higher yielding products, but 3 years out, how do you see from a structural perspective?
We'll come back on that, Samir.
Okay. Thank you and all the best.
Thank you, Samir.
Thank you. The next question is from the line of Kunal Shah from Citigroup. Please go ahead.
Yeah. Hi, sir. So just wanted to check in terms of what would be the cost of bulk deposits that we raised during the quarter, and was it like more towards the end and we are not seeing the impact in terms of the overall cost of deposits?
Sujat, go ahead.
So, the cost of funds, as I mentioned on the savings bit, has actually last quarter we've seen a decline from 5.17 to 5.06.
Cost of bulk deposits.
I'm just coming to that. So overall TD cost has of course increased. It has increased to about 7.4%, the overall cost of funds on the TD front. Of course, the bulk rates have, if you would be aware, have hit higher number, and the cost that will come in, of course, will impact in the next 3 or 4 quarters also. So yes,
Slightly higher than 8%, Samir.
Okay, higher than 8%.
Slightly higher than 8.
Yeah.
Around 8.1.
Okay, got it. And secondly, maybe I'm not sure if you highlighted in terms of when this migration issue would course correct. So would we see whatever incremental slippages we saw 2 months back, when do we see them coming back, and the rest of India GNPAs, which are at 8%, when do we see that stabilizing? How much time would that actually take?
Yeah, as we said, post-October, November has been, in the entire slippage that you see in the last quarter, 45% came in only October. November has been significantly better than October, and December is the best across last 16 quarters. So it's already back from the slippages perspective.
Oh, no, I'm saying whatever has slipped, how would it course correct? Yeah. I'm not asking about the incremental one, but if you look at October slippages which were there, when would it course correct?
The recovery. You are talking about the recovery.
Yeah.
So recovery rates have been higher than the last 2 months. For example, last quarter 139, this quarter 178, and we are seeing.
And first quarter it was in 81 crore.
So first quarter was 81, second quarter 139, last quarter 178, and we clearly see that uptick also in Jan and Feb.
Okay. So by March, we should see that normalizing.
We expect it on that.
Okay. Thank you.
Thank you. The next question is from the line of Puneet Balani from Macquarie Research. Please go ahead.
Yeah. Hi, sir. Thanks for taking my question. My first one is, this quarter we had an ARC sale. So just wanted to understand the accounting for that. Like, the way I understand is, we have provided up to like 50-60% for that, and the remaining is to be taken in the part of other income. Am I right? Or just wanted to get because in the disclosures there is nothing related to the ARC income. So just wanted to confirm for this quarter.
So, the ARC, the total portfolio was 720, and at the time of sale, whatever the carrying amount of provision was 352, and that we have the additional provisions that was required, that was created at the time of the sale, and the overall transactions is a PL neutral transaction.
Okay. So then this quarter we'll see the additional 350 crores provisions that you had created during the time of the sale, and then you have not.
So that was already there in my books.
Right.
Adjusted at the time of sale of the assets.
Got it. Okay. And then, okay. Right. And second bit on the stress pool bit, now we're seeing that, because of the migration to the core banking system, we had incremental slippages. So going forward, should I see this stress pool, should I expect the stress pool to decline, which has gone up like, say, from 55 to like 75 billion over the coming quarters? Should I expect this to decline? What's your understanding? Because it seems like the forward flows keep on happening every quarter despite, all these things. So any comment on that?
What we say that is we've seen as of now in a EB portfolio, total slippage percentage as DPD percentage is coming for, that is in 3.4%. And we saw that whatever the amount have the slippage in there is 60% recovered and 40% slippage to NPA. In that sense, we are calculate on that. We find out on that this is an 400 crores will be like to slippage in a quarterly basis.
Okay. Got it. Thank you.
Thank you. The next question is from the line of Prakhar Agarwal from Elara Capital. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. 2-3 questions. One, when you talk about slippage due to the migration, can you help me understand why would it not recover? Because you probably took time to train the staff, but if there is not underlying cash flow problems with the customer, why should the recovery take more than 2 months for that portfolio?
No, what we see that in the group loan, and mainly it is in weekly based. And there is a first point on that. The weekly, when it is happened second week, they are not able to give the double installment to all of the customers. So this is the main point on that. And the second point on that, they are normally practice and behave on that. They are paying this amount in the last installment. When they are closed the loan in the last installment, like in the 50th number of week, and that day they are given together in the 2. So that is the normal practice on that. And our system is not doing in that. That is not, they are not know that. But I hope that they are also recovering coming on that. And of course it will be reducing on that after that. So that if you see November, December, it has been come down drastically on that.
So in addition to Mr. Ghosh, so when the customers are thrown into NPA because of this migration issue, these customers were marginal customers. So those were the 80 days DPD. The moment customer goes in, cross this 91 days DPD, even if he pays the 2 installment back to me, so he will come back at the DPD of 80, but he will remain stamped as NPA since once he touched NPA. So entire amount needs to be recovered from the customer to
bring the customer out of NPA.
No, I understand that part, but then your recovery number should also have been higher, right? So irrespective of the tag that you have for the full payment of 2 months, but then your recovery amount should have been higher even if he's paying his one EMI.
So my recovery number has been increased from 139 crores to 178 crores this quarter.
Second, in terms of the fee, if I were to look at 2-3 line items, if I were to look at your third-party income, that has come down a significant rate. I'm talking about it from a trend perspective. Can you also help me understand what are these card charges which has moved from Q1? If you look at Q1 to Q3, that number has essentially doubled. What are these essentially the nature of these card charges and the others, which is around 176 crores? If you look at these 3 line item and other income, can you help me understand what is happening there?
Please give a couple of seconds. No, if you see that we are revised our group insurance policy to the customer. So earlier we have given that the mandatory to the all customers as a insurance. That time premium has come on that. Now we are decided on that everyone sometimes is not needed to the insurance. So after the taken loan and we are offered and then those are interested, they are coming. So during this period, so little bit we just change some of the system and the process, and that will be taken some time not to come on that amount in that third party product, and it will be gradually coming on that, and it will be like the better way the people will get the services of insurance with all the compliance with the regulation.
On the card charges, now with post core banking migration that we have done, we have an ability to adequately and appropriately charge debit card customers. We have at certain gaps in that area. So now we have a better ability to collect the exact charges, compute it exactly, and that's why the numbers are slightly better.
Okay, and this last one, others, what is exactly 176 crores in others?
Others is that one-off, which is 400 crore in the last year, similar quarter, same quarter, there is an ARC sale, one-off income. That is not there.
With, on management changes, so while you highlighted that you have onboarded a couple of guys and they will join in, but if you look at on the other hand, there has been guys who have been leaving, and probably that trend seems to have not halted. What do you think exactly is the reason for that? And when do you think it probably settles down? Because every now and then we keep on hearing that there is some other moment which is happening. So what do you anticipate the reason to be, and how when you do see this settling down?
If you see that it compared to the last financial year and last financial year, we are more stable on that. Yes, 1-2 have left, and that is in bigger opportunities has got by them. And it has been also, of course, it is not expected on that, but a very good number of team members also has joined to the bank for future way to grow and reach to the bank the goal. So I'm feeling that the very comfort on that, the very strong team now in the bank to running this bank on that.
Got it. That is it from my side. Thank you.
Okay. Thank you.
Thank you. The next question is from the line of Yuvraj Chaudhary from Anand Rathi. Please go ahead.
Sir, just one follow-up on our MFU claim. So we mentioned earlier we could have applied for 31,000 crores. However, we applied for a lower claim. So any reasons for that?
No, it's not that. The scheme provides for the fact that a borrower has to become NPA and stay NPA for 6 months within the 3-year period of taking the insurance cover. In our case, 85% borrowers are normally paid and closed, therefore they never came into the NPA pool. Or they have come to NPA but not stayed for 6 months. Therefore, we didn't need to claim for that. Practically, that's what it means. So, the scheme said 15%, but ours is roughly around 11%.
Okay, that was helpful. Thank you.
Thank you. The last question for today is from the line of Maruk Adajania from Nuvama. Please go ahead.
Hello. Thank you for allowing me to come back again in the queue. So, I just wanted to know what would be the slippage from SMA2 into EEB NPL this quarter?
Just given a 1-2 minutes on that.
Maruk, I'll get in touch with you on this. Currently, I don't think we have that number.
We have not in a hand this number. I'll be glad to get back to you.
Thank you so much.
Thank you. Ladies and gentlemen, that brings us to the end of the question and answer session. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you. Thank you so much for participating in the conference. Thank you so much.
Thank you to all of you. Thank you to participate and given your valuable time. You will keep confidence on us. We are always with you on that. Thank you.
Thank you. On behalf of Bandhan Bank, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.